I'm with Shawn Khunkhun, CEO of Dolly Varden Silver. The symbol is DV on the TSX Venture and DVS on the NYSE. Hey, Shawn, how are you today?
I'm doing well, Robert. How are you?
I'm excellent. And especially happy to see Dolly Varden trading in the US. And a few days ago, you guys traded over 1 million shares in one trading session. So what's working for you on the American side?
I got to say, you are one of the big reasons that I advocated to the board for the uplisting. I'd come down to the Rule Symposium, or I'd see you at a conference, and you would say, Shawn, when are you gonna make it easier and more accessible for U.S. investors? You're coming down and doing all this marketing in the U.S., and it's very challenging for the average U.S. investor to buy. So I just wanted to thank you, because I have advocated to the board for 2 years to make the move. And why would a board be resistant to such a move? The reasons are there's additional costs and additional time and some increased potential liability that comes in with the listing. But you're absolutely right. What I like to say is, on a bad day, the NYSE listing trades 40% more dollar value than the Canadian, and on a good day, 400% more. So 40 to 400. So if that's not a compelling case, if we look at some strategy around the uplist, so the uplist was made effective on the 21st of April. And if you look at the level of activity in that second quarter with the acquisitions, the financing, the drilling, everything was staged on the back of that listing. So we're very, very happy with it so far, and wish I would have done it sooner.
Yeah, well, thank you for that. And I think, you could say that, you wish you had done it sooner, but maybe you did it at just the right time when the silver market was really starting to gain traction. And we finally, here in the second half of 2025, have a market for junior mining stocks. It's been a long wait. And in particular, for silver mining stocks, this has been quite a last few weeks for the silver juniors. Incredible. And I get what you're saying about doing the dual listing on the NYSE. It's not a piece of cake for a company based in Canada. You have to get more accounting. You have to hire a lawyer who obviously knows the process. There's more expense involved in it. And then, as you said, there's more liability for the management team. So it's something you have to really think about and do in a well thought out fashion. I think that's what you did.
Yes, no, I totally concur.
So let's talk about Dolly itself. So market cap is over 500 million. I think actually over 600 million in Canada now. The company has grown, and you've had 5 rigs turning. So tell us, what's the latest from the project?
Yeah, so there's sort of 3 aspects to the drill program this year. So we started on May 15th. We launched a drill program on the back of raising some additional funds and some efficiencies and successes that we were seeing. We increased the program. So we've now completed the equivalent of 55,000 meters of drilling. We use 5 rigs to complete it. So the way I would like to express the drill program is, currently right now the company has 64 million ounces of silver and 1 million ounces of gold. Now, what does success look like? Success is taking that 64 million ounces and turning it into 100 million ounces of silver, and in addition to going in an excess of 1 million ounces of gold. So I'd like to get the company to a place where we're currently 150 million ounce silver equivalent co to a 200 million ounce silver equivalent co, half silver, half gold. Now, the way we're going to try to execute that plan is we're focused on the Wolf. And on September 2nd, we put out the 1,422 gram per ton silver over 21 meters. So we had the best drill intercept in the company's history. It was a 30,000 gram meter hole. It was silver, and so that was very significant. So we're looking, I think the Wolf will be the single greatest contributor to adding those high grade pure silver ounces to the resource. So a lot of this year's focus was on the Wolf. And then the other area that was as much in focus, so if we could say 40% allocation to Wolf, 40% allocation to Homestake. And what I'm anticipating imminently is some results from Homestake silver. And so up at Homestake, you've got about 1 million ounces of gold and 20 million ounces of silver currently, just at Homestake alone. And there's two zones. There's Homestake silver and Homestake main. Homestake silver is a silver gold system. And what we've identified is this high grade plunge of mineralization that is both silver and gold rich. And last year, we drilled, and we press released this in Q1 of 2025, two big intercepts, about 80 meters and 90 meters of over 300 gram per ton silver equivalent. So we had 93 meters of 357 silver EQ, and it represented over 200 grams of silver and almost 2 grams of gold in that interval. So just it's wide, it's good grade. Now that as that plunges to the north, your neighboring deposit is a gold-centric deposit, Homestake main, where we've cut 46 grams of gold over 25 meters. What I'm waiting on is on a 50-meter step out. We're waiting for some data, and if that deposit continues to the north, I think it's very, very significant. So the Wolf result that we put out, the 1,400 grams of silver over 21 meters, that's not in the resource estimate. And this step out hole most definitely is not in the resource estimate. So we're showing growth. We'll see what the numbers are at Homestake, but we're very optimistic based on previous results. And that leaves a 20% component to test targets like the Big Bulk and other projects property wide. So a lot of drill results to come. I think what's on deck now imminently is the Homestake silver results.
So to be clear, the step out that you're talking about is from the Homestake silver zone. Is that right?
So the two zones, Homestake silver and Homestake main, are only about 300 meters apart.
Right.
And what's interesting is, there is a theory that there's the same system, right? And there are these two high-grade plunges, one at Homestake main, where you've got this, better than 5 gram gold material, nice high grade concentration of it. And then at the neighboring Homestake silver, which is just to the south, you've got that same oriented plunge. And as we drill it, is it actually coming underneath into the north, and are they one system that come together? So we'll see what happens there. And again, there's a connecting deposit narrative that we're seeing on the Wolf with the Torbrit and at Homestake main and silver. We've also got some drilling pending at Wolf that we're also quite keen to get the assays back from. Some big, more big step outs, really ambitious step outs. So look, you know what, this project, there's a reason, Robert, we're a $600 million company. It's very, very difficult to be able to grow with the drill bit organically through discovery, these type of numbers in a safe place. And so it's, I think I was talking to my team this morning, this market's moved a little bit, right? As you said, price of silver's up, I don't know, maybe 50% since April. Price of gold's up about half that, 25%. And some of these equities are starting to reflect the confidence that investors are seeing in the metals. And, but, we are still, ways away from how these companies used to be valued. These companies used to be valued at a percentage of their metal value, 10% in situ value. We're not we're not seeing those valuations today. We're not even seeing.
It's very interesting you say that. I was about to just ask you that, because in the previous market environment, a premium silver project in a tier 1 jurisdiction was generally valued at $2 per ounce of silver, in the ground. But $30 per ounce silver, maybe you value that at $3 per ounce in the ground. At $40 silver, do you value it $4 per ounce in the ground? What are your thoughts there on valuing the silver ounces in the ground?
So look, if we go back to a time where silver was $16, you had a premium company called Silvercrest that was valued at $6 an ounce in the ground in 10 years ago. And so you go back to the last great gold cycle. Kinross bought a Redback for $1,500 an ounce in the ground when the price of gold was trading at $1,500. So there's a wide range of valuations in terms of where's the company. Is it an operating company? Is it a development stage? Do they have their permits? Are they funded? What's the grade? How deep is it? There's so many factors. It was actually Bob Moriarty when I took the job at Dolly 5.5 years ago. Bob reached out and he said, "Kid, you're in the catbird seat." And I go, "What do you mean?" And he goes, "You could sit on your hands and do nothing, and this thing's going higher." And the number he gave me was, he said, "Shawn, a good silver project in the last bull market traded on average at $3.30 an ounce in the ground." And the day he called me, we were trading at 37 cents an ounce in the ground. And so, today maybe we're trading at $2 an ounce in the ground. But we're looking to increase the ounces in the next 43-101. And I like your math. If silver's $40, why, this is all based on, a percentage of the spot price. And so, yeah, we should be, and I could point out peers like Vizsla or Argenta that are getting that $4 per ounce valuation. And so, companies are seeing it. And I think for us, what I feel really good about is investors that are buying shares. I think there's a lot of upside. I think there's, every CEO thinks this company is wildly undervalued. I think, on a peer basis, there's an opportunity for a 30 to 50% appreciation to get in line with some of our peers.
So going back to the Wolf zone, the Wolf vein, the Wolf zone, call it what you will. That's an impressive intercept, 1,422 grams per ton silver, not silver equivalent, silver over 21.7 meters. I see an intercept like that maybe once a year in the entire market, like 1,400 grams per ton silver over more than 20 meters. That's very impressive. You kind of, alluded to maybe we'll have some more joy from that vein zone this year. Do you think you can have another hole like that on that, level?
Well, what's interesting is let's calculate that. And the gold to silver ratio has changed a little bit, but the day we hit it, I calculated it on the gold silver ratio a month ago. And on a gold equivalent, on a heads up silver basis, it's about 29,000 gram meters. If you take the grams, you multiply it by the meters, call it 30,000 gram meters silver. It's about 333 gram meters gold equivalent. Okay, with this crazy 85-to-1 ratio. Do I think we're going to have another 333 gram meter interval? Yeah, I do. I think we will. So I think that and look, we've seen them in the past, right? We had a hole at Wolf, 1,500 grams over 15 meters. We've had some, again, it's probably closer to 22,000 gram meters versus the 29, but it's in the ballpark, right? But do I think we're going to have 350 gram meter intervals, gold equivalent? Absolutely.
Okay, well, that's good to hear. So we've got Wolf, we've got Homestake. You acquired some more ground in the last couple of years, including a Porphyry target. You said that you put a few holes in there. What are you expecting from the big bulk target?
So again, when I talk about the 40-40-20 split, Wolf, Homestake, regional exploration, we've completed about 83 holes this year. 2 holes went into big bulk. And, I think what success looks like at a Porphyry is, the textbooks tell us that big porphyries are about 0.2 copper, 0.2 gold, right, on average. But what you need to make them economic is you need to get into the 0.5, 0.5s to, get into that, and to really make them scream. If you can get 1 and 1, you're off to the races. So step one, like if you go back to Wolf, when we first hit it, 2021, the first intercept was 1,500 grams of silver over 1.2 meters. That's it, right? And now here we are, and the grade's gone up 50%, and the width's gone up 2,000%, right? So if we can, we're not going to start by hitting 1% copper, 1 gram gold. But if we can start showing that it is definitively a fertile porphyry, if we can get some textbook grades, I've got a lot of confidence in my technical team. They'll vector into where does it daylight, where's a higher grade zone, and it's going to require more than 2 drill holes. But we wanted to be systematic, and we're a silver company, and that's where our focus is, and that's why our resources are going 80% to finding silver, and if there's a gold byproduct, great. But what I wanted to do with two out of the 83 holes was to give my shareholders an opportunity to go swing at a red Chris KSM style target. And success is going to be if we can show it's fertile and we can show some textbook grades.
Okay, very good. So moving on to the silver market and silver sentiment right now. So, I think back to spring 2011, a very active time for silver and silver mining stocks, and I recall that move from 30 to 50 in 2 months in March and April 2011. And I remember by the end of April, when silver hit 49.78 an ounce, it was really extended. Sentiment was just absolutely over the top. Everybody was bullish, silver then. And here we are today. We're above 46, Shawn, and it still feels pretty early to me. Like people like you and I and some of the guys I spoke with in Vancouver over the weekend, we're bullish, but we've been bullish for years, so that's not anything new. I'm not having any new conversations with people that are like, hey, should I buy silver? Hey, should I buy this mining stock, right? So it feels different this time, and it's like inevitable that we're going to break through 50. So what's driving this move? And just kind of very interested to hear in your thoughts on how much higher the silver price can go.
Yeah, look, I think that what's driving this move is gold's leadership. I think the reason silver catches a bid by precious metals enthusiasts and those who are looking to preserve their purchasing power and try to stay ahead of inflation and systemic risk, turn to silver because of its unit cost. So I think the number one factor driving silver, in my opinion, today is gold. And I think when you get into the type of move that you described in the spring of 2011, it was really gold's leadership going from 300 to 1,500 and then ultimately to 1,900 later that summer that made silver relevant. And for 90 years, silver, for the last 100 years, 90% of the silver demand was monetary. But it's silver and gold are money. And so number one, gold leadership. Number two, gold leadership, but now who's buying it, right? Who's buying silver? And I think you have some speculators some precious metals enthusiasts like you and me who've been around, studied, and seen cycles, who are going, okay, well, silver's cheap relative to gold. Maybe some of the stocks we own are up, and we're taking some profits, and we're rotating that into silver. So I think you've got industry participants. Now, the challenge with silver is there's so few ways to play it. So physical's one, and historically, central banks didn't buy it. But what you're starting to see, whether it's in the Middle East or whether it's in Eastern Europe or and further east, you're starting to see central banks get into silver. And so you got gold's leadership, you got central bank buying. You've got this thing that we've had for the last decade or more, where you've got growing industrial demand, and that's not slowing. And so that's put a steady bid under the silver market. I think what got the party going, though, was President Trump. And I look at, the tariffs. First time in a long time, historically, metal for the last 2 decades was going west to east. So for the first time, a new trend started where metal didn't go from London to Singapore, Hong Kong, Delhi. It went to Dubai, it went from London to New York. And maybe it was temporary, right? Maybe. But that, and just, this Trump administration, they're not only pro Bitcoin, they're pro gold. And so you have the president, the effect there. So those are some of the big topical reasons. And I think the last reason is maybe the most important: momentum. And, we're in a world today where over 50% of managed money is passive. And it looks for triggers and algorithms. It looks for momentum. It's all technical driven. And so the fact that we've now got price momentum, and then for me, this is one that I really hold true. I watch silver in every currency, because the US dollar is the best currency in the world, right? It's the strongest currency. There's a lot of demand for dollars. The dollar's been strong for a long time, decades and decades and decades and decades, relative to other currencies. Okay. So silver, despite a historically strong US dollar, has still managed to inch its way back almost to an all-time high. And what was really interesting last year is I think silver was closed at almost the highest close ever on an annual basis from where it closed the year. And so, you pointed out, but few know this, we are in uncharted historic territory right now. And silver's never done this. We've had 2 big spikes, one in 1 in 11, and they were short-lived, and they played out in a matter of weeks. And those type of moves are not sustainable, right? Those parabolic euphoric tops, we don't have that set up here. It's a totally different setup. And even for gold, like, it is such a different environment today. The fact that you've got JP Morgan going out, Morgan Stanley saying, you should forget the traditional 60-40 portfolio. You need a 20% weighting in gold. So there is something happening that is totally different. I wasn't around in the 1920s. I wasn't even around in the 1970s, but I don't know, maybe those 2 eras rhymed with what's happening today. But I've never experienced anything like this before, where the world is saying, I need gold. And then a small community says, well, maybe I should get some silver.
Yeah, I think that last point is really spot on. So the fact that there are portfolio managers and financial advisors out there who are saying, take some of that bond allocation and move it over to gold and silver, that is just absolutely huge, because that pool of capital is gigantic. It's bigger than we can even appreciate. It's trillions upon trillions of dollars around the globe. And even if a small percentage, I'm talking about like 0.5% or 1% goes into gold and silver, it makes a big difference, especially in the silver market where mines just don't magically ramp up and mine more silver. It takes years of investment and planning to have your mine actually, you know, come to the market with more gold and silver. So yeah, I think that's an excellent point. The central bank one is very interesting because previously the central banks were not buying silver. It was not even in the conversation. And now the fact that it's just even being contemplated is a major, is a major shift. And price momentum, absolutely spot on there. A lot of chart analysis has come out in the last week, and it's pretty bullish. I was impressed by some of the things I've read over the last several days, and it just feels like inevitable that $50 price is is going to get broken through. So when it does break 50, Shawn, it could be tomorrow, it could be 3 months from now. Where is it going? Like longer term, like where is the silver price going, you think?
That's a good question. Look, I don't know, right? That's the simple answer. I don't know. But if I tried to venture a guess, I would suspect, based on how assets behave when they go through a top, and what we're looking at here is the third time, right? That there is no triple top, right? So it's and then okay. So what's the key? You and I talked about all the fundamentals that suggest we get a higher silver price. I believe if we factored in inflation, you can make the argument. You can make the $150 silver argument. Okay, so silver to represent the 2011 high, to represent the 1980 high, there is a case for $150 silver. Now, I don't think it goes there anytime soon. I think the next level is 75. I think, and whether it's 73, 78, whatever, you're probably going to see when it breaks 50, and it might, have a false break and it might have to go back there again. But when it ultimately breaks 50, it's going to overshoot, right? Because there's no resistance there, right? And, maybe a guy in 1985 would have been incentivized to part with his silver at $55 or $60, but, inflation adjusted, not interested, right? And I know a lot of stackers, I'm one of them. My silver is not to trade. My silver is for my children, right? And their children. And it's, that's the last thing I'm going to touch, right? I don't care what price it gets to. It's not for sale. And I think that's the mentality of most stackers. The silver is something that we'll never go to. We'll go to everything else before we go to that. So I think, but to answer your question, where's the price going? Look, could silver go to $300, $400, $500? Yeah, anything's possible. And I think if you look at like how much silver is used in industry, it's not going to, if we had 2, 3, 4 times the silver price, it's not going to really impact the goods that we're buying. It's just such a small amount that's being, used in these expensive items. So, short answer, I think once we break 50, which I think happens imminently, I think it's a 2025 story. I think we see a 7 handle on silver, 70 something, and then we'll consolidate, right? We'll consolidate, and maybe we've got to come back and test 50, and that'll be a new base. What was resistance becomes support, and then I think it's a question of I think triple digit silver is inevitable. And if we took the mining ratio, which is like 8 to 1, and we took the price ratio, which is over 80 to 1, like, if what would the number be if we divided 4,000 by 8? That's your silver price.
Interesting. Yeah, I think that's a great point you make about the $50 level and how it's likely to overshoot on the breakout. So it could go to 70, 75, it might even go to 80, right? We don't know. But one thing's for sure, like The $50 level is obviously psychologically important, but you have to think about it from the standpoint of the investor who may have been holding silver for 15 or 20 years. Suddenly that price is no longer that attractive. It's not nearly as attractive as it was in 2011, that's for sure. So you're probably not going to have the same response that you had in April of 2011, where all this silver came onto the market as soon as it got close to $50 an ounce. So I think, you know, those are excellent points. So two final questions, Shawn, and just going back to Dolly, what keeps you up at night? Like, what do you worry about?
I sleep like a baby, Robert. And it's because I spend 12 hours a day working, right? So, you know, I'm exhausted. So nothing keeps me up at night. Companies look, what we've built is we've built a company that is going to be extremely relevant for the future of the Golden Triangle, right? So whether we are the future of the Golden Triangle or we get brought into that future through a takeover or a merger, I don't know the answer to that, but I've got something that's rare, that's special, that's high grade. So we're going to do very, very, very well. And so, you know, there's things that I work on and try to improve, but nothing is keeping me up at night. Like, I feel like I've got the right team, the right project, and this project was a producer. Therefore, I feel like a lot of the questions you have around, you know, will it be, what are the challenges environmentally, metallurgically, you know, I feel like because it was done twice in history, in and around 1920, all through the 1950s, like up until 1959, there was 2 times in the last 100 years where people found a way. They found a way to liberate the silver from the rock, get it out, do it economically, build a business around it, and a good business. You know, Canada's 3rd largest primary silver producer, the Torbert mine we have today. Canada, British Empire's richest silver mine, Dolly Varden mine, we have that today. So look, this is a tough business. It's a humbling business. There are companies that are worth billions of dollars today that die tomorrow because of all sorts of issues, whether they're government, whether they're environmental. And so, but for me, those are things I can't control, right? The things I can control, I feel very good about how we're running the business. We got treasury, we got results coming, we got catalysts, we got a so we're working hard, and I'm happy with the results.
So final question. So you're going to put out the results from this year's program over the next several months. It's probably going to be into January of next year, I would imagine, if we go by past years. And then you'll tee up 2026. What's the 2026 plan, Shawn? I know it's not set in stone yet. You got to do a lot of planning and strategizing. But if you had to say, what would you like to accomplish in 2026 right now, if you could just put together a plan right now?
Look, I think when I study the great businesses, Agnico Eagle, Barrick, Newmont, First Majestic, they are companies that if they were merely just to focus on their flagship assets, they would not have experienced the growth and they would not be industry leaders. So I could tell you exactly what we're going to do on our project. You know, we're going to put out a new mineral resource estimate. We're going to put out a study. We're going to continue to advance, grow, and de-risk and move our project forward. But in addition to that, I want to try to move Dolly into becoming a much larger entity. And I think the only way to do that is the buy and build strategy. And so identifying opportunities where we can add value, identifying cash flowing opportunities that we can marry up with. so that we could use that cash flow to unlock our project. So, when I think about Dolly, I actually look out 18 months. And what success looks like for me in 18 months is a $2 billion company that's got cash flow, that's got a pipeline, that's got exploration, that has a portfolio of marketable securities. And a lot has changed for the company since April, a lot, like we've dramatically, we're twice the market cap, we're twice the share price, we're 6 times the size in terms of ground. We have gone from 2 past producing mines to 5. So we've seen some dramatic growth since the spring. And when I look out 18 months, the thing about a bull market is you can go from defense to offense and you can grow rapidly. And we've got the platform, we're on the exchange, we've got the team. And so it's time for us to go out and grow.
All right. Very good. Shawn, thank you so much for your time.
Thanks, Robert. Thanks for having me.